All right, so I'm Prabhat, this is Avinash, and we are about to discuss the 1959 letter by the GOAT, Warren Buffett. And this is during his partnership years, and we already learned, we haven't read this before, at least I haven't. So it's so interesting to see what he's going to throw at us. But before we get started, I'm going to throw it back to Avinash because he has smart things to say.
Awesome. So let's go over, what was going on in 1959. So in 1959,
Space race?
yeah, seeing the screen?
Now I am. Yes, yes, yes.
Okay. So 1959, what's really going on here? Buffett is 29. So the things that are
Oh my
going on,
God.
he's not even 30 yet. Again, multimillionaire, has his own, firm that he's taking care of, private lenders. So, people. This I thought was interesting in the 1950s, at the beginning of decolonization of Africa and Asia. So we're starting to kind of get there in the 1950s, kind of late 1950s. 1951, we went over this last time, which was the point contact germanium transistor, which is the old school transistor, was invented, and then MOSFET, which is kind of the new hot transistor that we're kind of used to these days. This was 1959. The immunization, so polio in terms of health and science, that's also going on. We have Francis Crick, James Watson, and Rosalind Franklin all discovering the DNA double helix, but particularly in 1959. So this is just the era, but in particular, what's going on in 1959? This is the third year of President Dwight D. Eisenhower. This I thought was so fascinating. 1959, Alaska is admitted as the 49th U.S. state. Did you know that?
What? It wasn't a
Yeah,
state then?
yeah, that's what I
Before
was
that?
thinking too. I was so surprised.
And there's another thing that becomes a state later on?
Yeah, there's one more. Guess which is the 50th state?
This is DC.
No,
Is
not
DC
DC.
a state? It's a state,
It
right?
is, yeah, yeah.
It's Puerto Rico's not a state, is it?
No, but I'll tell you, it's actually on the slide. Um,
Hawaii?
yes, good guess. Yes, it is
Oh my
Hawaii.
God.
Hawaii is the
Wow, wow.
50th state. Yep.
All right.
So
Good
January,
stuff. Good.
yeah, yeah, and then we finally get to 50 states, which I had no idea about. I thought it was always 50 states, but Alaska is admitted as the 49th state in
Yes, yes,
January.
yes.
January 29th, Walt Disney, who's now dead, by the way, he releases his 16th. I mean, it releases its 16th animated movie, The Sleeping Beauty, in Beverly Hills. May
Mm.
8th. Remember last time how it was Pizza Hut?
We're talking about Pizza Hut in Nebraska
Yeah,
or something?
yeah,
Or
yeah, that's right. And then it was May 8th, and now in 1959, Little Caesars is opened up in Detroit.
it's just
Um,
the golden era of
of
pizza.
pizza, yeah.
Wow. Wow.
This I think you're going to find fascinating. Did you know in June 8th, the USPS attempted to deliver mail by missile mail?
I don't know if you guys are hearing this or watching this, but I'm so suspicious because this is like during Cold War.
Right.
I don't know what's going on with missile mail.
Yeah, and I think it was just a plan where it was going to be like, hey, we'll be delivering your mail and packages by having a pinpointed missile over to your house and dropping it in an airbag. I thought that
And
was so
what, like
fascinating.
destroying your house, and then it's like, you've got mail, boo.
And no house. But this I
It's
thought was,
surprising because you know how that passed, and now
yeah,
like Amazon wants to deliver through drones, and people are like,
that's right.
no,
Yeah.
think of the noise.
Full circle. Oh man. July 15th, a strike occurs against the United States steel industry, which I didn't
Ooh.
know about. So let's see if this has any impact on any of Buffett's, businesses. August 21st, Hawaii, like you guessed, is admitted as the 50th U.S. state. So 1959 is a great state for,
Back to back. Wow.
yeah, yeah, same year. Very surprising.
Huh.
Um, this I thought was also interesting since we talked about missiles in space. So Luna 2 became the first man-made object to crash on the moon. Um,
Wait, is that a win or a failure?
I think that's a fail. It's got to be a fail, right? I haven't heard about the Luna 2.
When crash implies a fail.
Yeah, yeah, it's got to be a
But
fail.
yeah, nobody heard it was success. Then they would have been like, remember Luna 2? Like, no. Oh yeah, don't
Exactly.
worry about it.
I worry about Luna 1 though. I wonder what happened
Yeah,
to
what
Luna 1.
happened to the other one? Maybe it never made it anywhere.
Oh man. But
Interesting.
December 18th, the US launches SCORE, which is the first satellite communication. I'm surprised. I think maybe this is a typo here because it might be from another slide. But I thought maybe I'd just kind of cover this as well. So people who we kind of know about today in 1959, Brian Williams, Mike Pence, Kevin Spacey, Magic Johnson, and Simon Cowell, all
Yeah,
born
wasn't Kevin
1959.
Spacey last year?
I don't think so. I think that was someone else. I don't. Was Kevin Spacey 1959
Like I remember him from.
last
Oh
year?
no, never mind. You're right. He
No,
was
that was Kevin
Juilliard.
Bacon. That was Kevin Bacon you're
Oh
thinking
yeah,
about.
yeah.
Yeah, yeah, yeah,
So many
yeah,
Kevins.
yeah.
Good for him.
Kevin's,
Wow, good for
yeah,
some Kevins.
yeah. But this is kind of what's going on. 1959. So we get a good glimpse of what Buffett's about to tell us when he's 29.
This is what he's. Yeah, all these
Yeah.
people are born that he doesn't
Yeah.
know. Ooh, ooh, ooh. Is that when I think Frank Sinatra is like, right? That's all the music people listen to these days.
Yes, that's right. Sinatra, they're
Fifties,
listening to one of the all-time greats, of course.
the
Um,
Rat Pack.
yes.
Oh yeah. It's my kind of music.
um, but yeah, maybe now we can jump into the letter. I'm so excited to get to the 1959 letter.
All right. So here we go. The general stock market in 1959. So just maybe we should recap a little bit. Just
Yeah.
last year, kind of highlights. He finally revealed the first company he invested in. It was,
Yep.
I think, Commonwealth Bank, a small illiquid micro cap type bank
Hmm.
that he found to be super undervalued. It was like a growth company that probably had a bright future, and then it got like increased like 30%, and he like sold all of it
Yeah.
to buy
Yeah.
something else.
That's right.
And he was like, "Oh, this was great." So he's like high frequency, value based trader almost.
Yeah.
So I wish he didn't do that, but he didn't tell us what he bought. So,
That's right.
but
Yeah.
apparently he bought a lot of it to get like majority voting
That's
share, and he's
right.
going to
So
try
we
to do
saw
that.
him, yeah,
Yeah,
as an active investor, which is very
yeah. I
surprising.
think he even said that he wants to be to the point where he can maybe unlock shareholder value using his voting
Yep.
rights. So
Yep.
yeah. All right, let's see what he
Interesting.
reveals this time. Hopefully something. So the Dow Jones Industrial Average, undoubtedly the most widely used index of stock market behavior, presented a somewhat faulty picture in 1959. The index recorded an advance from 583 to 679, or a 16% for the year. When the dividends would have been received through ownership of the average are added, an overall gain of 20% indicated for 1959.
Yeah.
So he's saying the stock actually grew less than the actual businesses did,
Yeah.
the
D-
dividends did.
Can I ask you a favor? Can you highlight that paragraph, the first paragraph, so that
Let's see.
or you don't have to highlight, but just drag the entire, yeah.
There
So
we go.
okay, so maybe let's talk about this. So this really means that so 16.4 for the year is where the index um, advanced to, but then
Hmm.
he did 19.9. Am I reading that right?
No, no, no. He's just talking about. This is nothing to do with what Buffett has done.
Oh, the
This
overall
is this
gain.
is
That's right.
just he's because he's talking about general stock market. He's just talking about
Yep.
Mr. Market, how it doesn't necessarily do what the companies are doing. He
Mm-hmm.
is kind of always kind of a little off,
Mm-hmm.
and he's saying the dividends went up 20%, and Mr. Market only went up 16%.
Okay. Okay.
So right, that's yeah,
Yeah. Yeah.
that's what he's
That's
saying.
right. That's right. Yeah.
Despite the indication of a robust market, more stocks declined than advanced on the New York Stock Exchange during the year by a margin of 710 to 628.
Mm-hmm.
Both the Dow Jones Railroad Average and Utility Average registered declines. Okay, so he's saying some of the industries are actually declining.
Mm-hmm.
At least the stock prices are. Okay,
Mm.
and that's despite that on the average the market did great, 16% still.
Yeah.
Um, most investment trusts, you know,
Yeah, that'd be cool. Or as you read it, maybe you could highlight it. That'd be great.
most investment trusts had a difficult time in comparison with the industrial average. Uh, Tricontinental Corp, the nation's largest closed-end investment company, total asset about 400 million, had an overall gain of about 5.7% for the year.
Mm-hmm.
And Fred Brown, its president, had this to say about the 1959 market in a recent speech to the analyst. So to quickly summarize that much,
Mm-hmm.
I guess most fund managers weren't able to, did underperform the 16%, sounds like. And
Mm-hmm.
one of the hedge fund managers had this to say, and I quote, "But even though we like the portfolio, the market performance of Tricontinental's holding in 1959 were disappointing to us. Markets in which investor sentiment and enthusiasm play so large a part as those of 1959 are difficult for investment managers trained in values and tuned to investing for the long term. Perhaps we haven't had our space boots adjusted properly. However, we believe that there is a limit to risk that an investing institution such as Tricontinental should take with the stakeholders' money. And we believe that the portfolio is in shape for the years ahead."
Mm.
Oh, cool. I like two things about this paragraph. One is the cool space joke about his space boots. And the second, I think it's kind of telling us what, Buffett and Munger tell us, that,
Mhm.
we underperformed the market, but guess what? It's fun. I can't predict what the sentiment will be, but we're playing the long game, and they're confident that they'll come ahead.
Mhm.
So,
Mhm.
uh, second paragraph here. Massachusetts Investors Trust, the country's largest mutual fund with assets of $1.5 billion, showed an overall gain of about 9% for the year. So it better.
Mm.
Okay. Most of you know I have been very apprehensive about stock market levels for several years. To date, this caution has been unnecessary. By previous standards, the present level of blue chip security prices contains a substantial speculative component with a corresponding risk of loss. Perhaps other standards of valuation are evolving, which will permanently replace the old standard. I don't think so. I
Mm.
may very well be wrong. However, I would rather sustain the penalties resulting from over conservatism than face the consequences of error, perhaps with permanent capital loss resulting from adoption of a new era philosophy where trees really do grow to the sky. Wow, this
Mm.
is what we just read. This is You have comments on this paragraph?
Well, okay. So if I'm understanding this correctly, he's saying, so um, for one, compared to the general market,
Mm-hmm.
especially the blue chip security prices, so all the blue chip stock companies, um, are they taken into? So he's saying maybe they're overvalued. Am I reading that right?
Well, he's saying in previously they had been overvalued, and I think he still thinks it's overvalued.
Mm-hmm.
And I think he's just saying it's kind of obvious because
But
most of you know I've been apprehensive about general stock market levels for several years. He's thought they have been overvalued,
mm-hmm.
and to date this caution has been unnecessary. I don't know if it's unnecessary because it's obvious.
Um, so other standard valuations are evolving, which will permanently replace the oil standard.
Old standard, right?
Hmm.
So I mean, it doesn't matter. By previous standard,
Yeah.
I mean the second I think line clarifies what he's trying to say. So by previous standards, the present level of blue chip, which is supposed to be the best stocks,
Return. Yeah.
yeah, contains substantial speculative component. I mean, he's saying, I mean, there's a lot of speculation, there's risk of loss, um, and he's like, you know what? Maybe I'm just old and outdated at this age of 29. You know how 29s get old and
Mhm.
outdated, and I just don't understand this new world, crypto. But you know, I'll just be my old 29 self, and you know, maybe I won't make the money, but I'd rather be conservative than risk losing everything I have.
Yeah, and again, remember from last year's letter, he was saying when times are good, I'm just trying to do the average here. I'm just trying to get to average rate of returns
During bull, yep,
during the
yep,
bull years, during the great times. But then in the bad
yeah.
times, that's when I really go to town and I kill everyone else.
But I like
So
this tricontinental corp dude. I mean, he's not doing average, right? He's not
no,
even made. I mean, he's missed it by what? He's underperformed technically by 10 basis, by 10 percentage points,
hmm
and they're like, it's cool, it's cool.
yeah,
Because even Buffett, I mean, during the dot-com bubble, I mean, Berkshire underperformed like crazy. It dropped
yeah,
like in 50% from its all-time high.
mm, yeah. But yeah, it doesn't really worry him because he knows during the downturns he's gonna have a great time.
Yeah. Okay, so his results in 1959, uh, there has been emphasis in previous letters on a suggested standard of performance involving relatively good results. Compared to the general market indices and leading investment trusts, in period of declining or level prices, but relatively unimpressive results in rising market.
hmm
So basically saying that, you know, in the previous letter he's put an emphasis on good results, especially he thinks it's going to do better when the markets are low, right? When the markets are going down.
That's right. In periods of declining or level prices,
Yeah,
but
yeah,
relatively unimpressive during rapid.
yeah.
Yeah,
Kind
so
of
kind of,
leverage trading, yeah.
yeah,
So
kind
that
of repeating what he was saying in the
like
previous letters.
we'll beat the
Yep,
market when things look scary, and hopefully we'll just be average during the good times.
yep.
Okay. Um, we were fortunate to achieve reasonably good results in 1959. I'm getting so tired of his. Oh my God, we're geniuses. Oh no, we can't possibly redo this.
Oh man, I
Oh,
can't wait. I can't wait to see how much he killed it.
oh my God. The six partnerships that operated throughout the year achieved overall net gains ranging from 22 to
Bam!
30%. Damn.
Wow,
The averaging about 26%. Okay.
incredible.
Portfolios of these partnerships are now about 80% comparable, but there is some difference due to securities and cash becoming available at varying times, payments made to partners, etc. Over the past few years, there hasn't been any partnership which has consistently been at the top or bottom of performance from year to year, and the variance is narrowing as the portfolios tend to become comparable.
Mm.
Okay. It's basically like, we kind of killed it again this year, but I'm sure later it's going to be like, please don't expect this in the future.
Right.
And then he's like, well, we have all these different partnerships that form as money comes in. So in short term, you know, they're not 100% have the same performance, but over time, you know, that
Mhm.
they converge to a single performance style or level.
So he did make 30%, right? Let's say on that. Okay, let's just take his average. So twenty
I
six
said 26
percent.
percent.
Okay,
Sure.
so he made 26%, and then the
Market
SM
did 16% or
it's
17%.
17%.
Yeah,
So you know what I'm confused about here is he's saying, hey, when it's going up and everyone's doing well, you shouldn't expect us to also do as good. But he's done better even in great times.
exactly. That's why
So
he's the greatest of all time.
yeah, I guess so. I guess really, maybe it's a volume thing. Like, he's got small amounts of capital right now, and so there's going to be more volatility if you have small amounts of capital compared to
I,
large. You
I
know.
think it's his conviction. I think that's the only unique thing about him. He is his own analyst, and he trusts his analyst, which
Mm,
is, he is himself.
mm.
He is so confident in his ability to value businesses
Hmm.
that he is kind of fishing where there's nobody else fishing. There's no competition.
Right.
And because there's no competition, there's also no social proof that what he's doing is correct.
Hmm.
That's the downside of no competition. And as humans, if I'm doing something, I feel more comforted if I know that people are kind of doing the same thing. When
Mm.
there's nobody around you, like, you don't know if you're just an idiot or
Yeah.
like a brilliant person who figured out something that nobody else figured out.
Yeah, and especially when you see these gains, an average investor would be so tempted to be like, "Oh my God, forget it! I'm selling right now. It's been a year, and I don't have
Yeah,
to pay, taxes on it or whatever, and or less taxes on it." So, but he's sticking to his guns, it seems like, and even the stuff that he sold and he bought, he's still killing it. Overall, it's twenty six
maybe
percent.
it's all his active investing. He's buying underpriced stocks, and maybe he's forcing management to unlock his value and then selling out. And maybe he's doing that
Yeah.
kind of like what Graham did. He would buy a cheap business
Yep.
and then sometimes forcefully liquidate it and keeping the money in the business. People lose jobs,
Mm.
but they would have lost jobs anyway. So it's he's a catalyst in that
Mhm. Mhm.
setting and making money.
Yeah.
Dang. Okay. The overall net gain is determined on the basis of market values at the beginning and end of the year, adjusted for payments made to partners or contributions received from them. It is not based on actual realized profits during the year, but is intended to measure the change in liquidating value for the year. It is before interest allowed to partners where that is specified in the partnership agreement, and before any division of profit to the general partners, but after
Mhm.
operating price expenses.
Mm.
Okay, that all makes sense. He's saying he's not counting money inflows in his returns. It's purely kind of talking about stock, his stock portfolio performance. He's moving out the office expenses.
Mm.
I don't think he's including taxes yet.
Mhm.
Well, I don't know if he hasn't sold anything,
Right. Or maybe
but
he has, and to just gain more position, but I guess, I mean, we don't know.
yeah,
Yeah.
but he's not. So he's not counting interest and all these. Like, he's borrowed some money that he needs to pay back.
Hmm.
Okay. But bottom line, incredible returns, like a machine beating the market.
Yep.
Okay. Okay. And he's not selling. He's basically looking at the market value of his portfolio. That's just telling you, hey, if we were to sell these stocks, this is how much we would be making. This is what our returns will be. But he's not
Mm.
actually selling necessarily.
Hmm.
The principal operating expense in the Nebraska intangibles tax, which amounts to 0.4% of market value on practically all securities. Oh, okay. So that's their big tax. Operating tax is just,
Point
what
four
is this?
percent.
0.4% of all. Oh, this is the interesting. I mean, this exists even if you don't sell anything. You just buy. This is a holding tax. 0.4%.
Oh, interesting. I didn't
And
know
that's
there
their
was such a
biggest,
thing.
right? And that's their biggest operating expense.
Hmm.
So it's not like office or car
Yeah.
salary. It's like we have to pay this 0.4% every year on the wheel.
Wow. Interesting.
Interesting. Last year represented the first time that this tax had been effectively enforced, and of course, penalize our results to the extent of 0.4%.
Man, this guy's really caring about this 0.4%. The people, it's like a margin error for most people
It's like
here.
I'm not skimming up the top, like what are these operating
Yeah.
expenses? How about Buffett's guys getting, eating all this cool food and taking vacations and doing whatnot with our money? It's like, nah, man, it's the Nebraska state
Dang,
government.
dang tax. But is this actually a fact? Like, if you keep your money in the S&P 500 today, would we still have to pay tax on it?
I don't know about
If you
Nebraska.
don't
I
sell,
don't.
I mean.
That's not a thing in Texas. I don't know about
Okay,
Nebraska.
okay, okay.
Interesting. Maybe that's how they funded the space race.
Hmm.
Tax the rich. Okay. Uh, Last section of this letter, the present portfolio.
Oh, great. Hopefully he'll tell us some names.
If you're lucky. Uh, Last year, I mentioned a new commitment which involved about 25% of assets of various partnerships. Yes, you did. Presently, this investment is about 35. Presently, this
Interesting. He
investment is
bought
about
more.
35%, not just more.
Oh, this
This,
whole portfolio.
yeah,
Oh my goodness.
35% in one
Whoa.
stock. That's probably illiquid too. This is an
Ah.
unusually large percentage, but has been made for strong reasons. In fact, this company is partially an investment trust, owning some 30 or 40 other securities of high quality. Our
Hmm.
investment was made and is carried at a substantial discount from asset value based on market value of their securities and a conservative appraisal of the operating business. Oh, interesting.
Wait a second. So are we still talking about the bank? He just invested a
No,
lot
no, no,
more
no,
into
no,
that
no, no.
bank? Okay,
No, no, no.
what we
Remember,
don't
he
know what it
sold
is, right?
he sold the bank and then he bought something else that he was like
Oh, okay, and we
with
don't know
his
what this
position.
is.
Correct. He didn't tell us what it was, and then
Okay.
it looks like he bought even
Mm-hmm.
more than we had thought he would, and it's actually a conglomerate. It's a holding company or investment trust that actually owns like 30 or 40 other things.
Mm-hmm.
But there's like
Mm-hmm.
this conglomerate discounter, or maybe more than that, but it's selling at a discount and to what the operating prices. So he bought it.
Interesting. So does this usually happen? I'm not too familiar. So like, let's say I have a gazillion dollars and I want to buy a part of Microsoft. And then Microsoft's like, hey man, thanks for putting in all this money. We'll give you a discount.
No, 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 no.
No.
There's no this. It's kind of like he bought another Berkshire, or he bought another, 10 Cent, or a
Mm-hmm.
company that has a portfolio of its own companies.
Okay.
So he
But he
bought some.
buys it at a discount?
Well, sometimes they do sell for a discount just because people don't know how to value it. Like
Uh,
whenever you have a certain company, and they buy like 10 different stocks
mm-hmm.
as part of company's portfolio, and people don't know what to do with it, so they just don't
Oh,
buy
I
it.
see.
So it
Okay.
remains cheap, but the
Okay.
underlying cash flow still remains
The
what it
same.
is,
Yeah, right.
and you can benefit from that, or you can spin
Okay.
out companies, like IAC that had, like, I think it's IAC, that's like a holding company, and
Yeah.
every few years it will spin off a new company. So the Match, dating app, that was part of it, and I think on the Trip.com or something has been
Yeah.
part of it. Same thing, like I think there's L Group Apparel, and I think Victoria's Secret is part of it, and it's been spun out.
Oh,
So
interesting.
there's always these little holding companies that, like Liberty Media,
Hmm.
that's a kind of a holding group, and
Hmm.
it actually owns Formula One
Hmm.
now.
But is what he's doing here? He's buying a holding company, but is he? He's not getting like a
He's not getting a
friendly.
special
Yeah,
discount.
he's not getting a special discount. But he
He's
thinks it's a
buying,
discount. He
yeah,
thinks it's a
market.
discount.
Mr.
Yeah.
Market is giving it for a discount.
Gotcha. Okay. Got it.
Just, uh, We are the company's largest stockholder by a considerable margin, and the two other large holders agree with our ideas. The probability is extremely high that the performance of this investment will be superior to that of the general market until its disposition, and I'm hopeful that this will take place this year. Oh my God, he's definitely going to collude with the other people and do spin-offs or something. He's going to try to get rid of this gap, the discount that it's trading. That's the whole thing with Tencent and Nasper's on Tencent, and then they're trying to close that discount that Nasper trades to Tencent, and they've done that by creating this process as the other company, and it's just the gap won't close. So everybody's like, well, let's close the gap because that means we get more money.
Interesting.
The remaining 65% of the portfolio is in securities, which I consider undervalued, and workout operations. To the extent possible, I continue to attempt to invest in situations at least partially insulated from the behavior of general market. Interesting.
This remains 65% of the portfolio.
The remaining, the remaining.
Oh, the remaining 65. Okay.
So the remaining 65, he's trying to do other stocks and the spin-off situations. But the next line is interesting. Like, as much as he can, he's trying to buy things that will not go up or down with the stock market.
Yeah, insulated from the behavior of the stock market.
Yeah, that means he's buying illiquid stocks. He's buying these ridiculous microchips or nanochips or micro cap or nano cap that won't be affected by the market because they don't have volume. Only way a stock gets affected from day to day is because it has high trading volume.
That
means there are a lot of buyers and a lot of sellers. We don't have a lot of buyers and a lot of sellers. Small company. I mean, the Mr. Market won't affect it too much.
Okay, so he's not looking for volatility. He just wants 65% of his portfolio to pretty much stay stable.
Yeah, I mean, I think he wants to. Yeah. So he's looking for things that won't be affected. Because stock market right now is overpriced, according to what Buffett is saying.
Right.
Right in this era. So he's not going to find bargains if he were to look for companies that were not insulated from behavior of the general market.
Right.
Because they will become overpriced.
That's right. Yep. Makes sense.
Maybe we can learn something from this. This policy should lead to superior results in bear markets and average performance in bull markets. The first prediction may be subject to test this year, since at this writing the Dow Jones Industrial have retracted over half of their 1959 advance. Okay. So he's writing this letter in 1960 February. So he's saying, he's buying these illiquid or small cap type stocks because when the market goes down, he wants to remain insulated from the downturn. Right?
Yeah.
He doesn't want to be affected.
That's right.
So that's part of his strategy.
So, but does that mean that he's protecting himself by? It's kind of like, is he expecting there to be a downturn then?
I wouldn't say. I mean, maybe, but I don't think that's how he's deciding. He's not deciding, oh, there may be a downturn coming. I think I'm making a prediction, so I will do this. I think his just general approach, his overall approach is protect my downside. So I think, and while he can, because he doesn't have that much money, while he can, he will buy things that are not correlated. And then ultimately probably gets too big and can't buy those anymore.
Yeah.
And it looks like the market went up 16% by February of next year. It had already kind of gone down every 8 or so percent. So. Should you have any questions, or if you have not been clear in any respect, I would be happy to hear from you. That's what it says. End of letter.
Interesting. Yeah. So this is the end of the 1950s, 29 years old,
End of
and
1950s. Yeah, I
yeah,
mean, this is it. This is the end of his 20s.
that's right. That's
Next time
right.
we hear from him, he'll be older
30.
man in his
I know.
30s. Oh no, he should like retire. He probably could retire if he wanted
Absolutely. I think
to.
but he's really at the peak of his. Well, we don't know if he's at the peak of his career yet, but he's still killing it in the market. These crazy returns, 26% returns. He's doing really, really well.
Just killing.
Um,
I think it's just the magic of small caps.
Small
Or maybe
caps,
that's what.
yeah.
I don't think I've done. I mean, maybe we need to just learn how to do that. Then we can. We have to have that conviction of valuation. Like I know I'm right, so why?
Yes.
Why? I mean, it's like
Yeah.
you feel comfortable being a one
And
man wolf pack.
yeah, and doing it to like a very high degree. Like what we can learn from this is, hey, have very high conviction and also put a lot of money behind your words. Because if you believe in something,
Yeah,
then
and if he
double down.
and if
Yeah,
he does bad, he has to pay out of pocket.
that's
That
right.
is,
Yeah.
he'll lose money, he'll lose reputation, he'll hurt his family
Dang.
members. I mean, no
Yeah.
wonder he's so downside oriented. It's like I can't lose money.
So much on the line. But yeah, really, really interesting. Yeah. So, okay, let's maybe ask you the same question that I keep asking you is, would you invest in 1959 with Buffett if you had known about this 30% compared to the industry average or 26 compared to
Yeah,
the industry average? Yeah.
absolutely. I mean, just from the point of view of like, oh, he beat the market 3 years in a row.
Yeah.
He probably knows what he's doing. I
Mm-hmm.
mean, here you go, here's my money. I'm just gonna be completely dumb. I
Mm-hmm.
mean, I wouldn't
Yep.
probably give him like all of my money, but I'll give
Yeah.
it maybe 5-10% or something.
But I wouldn't have any if I didn't know who this guy was, I wouldn't have any conviction in his thing. I'd be like, yeah, whatever, man. I mean,
That's
really,
true too. I'll be
he's not telling us what stocks he's invested in, really, you know, whatever that
Yeah.
stock
I think
is.
I
So
have,
it's
it's,
earned.
I have some hindsight, like just bias because I know Buffett at this point. So I'm like,
Yes, yeah.
yeah. Well, let's say some guy on like YouTube or like TikTok or whatever.
Yeah.
It's like, give me your money, I'll double it in 3 years. I'll be like, yeah, right, get out of here.
Yeah, you're absolutely right. And no real notoriety here. He's
That's just
just
like, oh, where are you? Where do you live? Oh, I live in Nebraska, Omaha. I'm like, what?
not even New York.
What do you do? I'm a farmer. Are you? Not really. What do you do? "Oh, I just sit around and read all day. I'm like,
Yeah.
okay, okay, dude, you're weird. Leave me alone.
Dude, funny that you
Blocked.
said. Funny that you said, and you're talking to him over the internet in 1959. Is that
Oh, that's true.
right?
That's true.
But you know what's funny about the situation is that his neighbor. I'm sure you know about this story, but his neighbor owned either a lot of Coke or was actually the CEO of Coke at the time or whatever, or a big
What?
shareholder. Yeah,
Really?
and he had said at the time, "Oh, should I invest in Warren Buffett?" And then he studied. His kids played together or whatever, and then his kids are like, "Oh yeah, he just sits alone in his room all day." And then he's like, "That's all he does. He doesn't even work." Like I'm never gonna invest in this guy. And then he ended up losing a lot of money because of that.
So the code guy wanted to invest with Buffett. Not the Buffett
Yeah.
was curious about Coca-Cola.
Yeah, that's right. Actually, as he invested later in Coke.
Yeah, yeah, yeah.
And but I know that there was a relationship with Coke that he had where the Coke guy called up Buffett and be like, "Hey man, did you buy a whole bunch of our stock?" And then Buffett's like, "Yeah, I kind of did." Yeah. But that's of course way later. But yeah, cool little
Oh,
anecdote.
legend.
I don't think I would have invested in Buffett at this time because I don't know the dude. I don't even know what's he known for. He's not even in insurance yet. It's just these bank things that he's messing around with. Yeah, his returns are pretty impressive, but I'd still call him like a one-hit wonder type of thing, right? I'd be like, whatever, man. Everyone can get hot in a couple of years, but let's see if you
I
can do
mean,
that for
if so
60
many
years.
people invest in Kathy Wood after 1 year,
Yeah.
so why not Buffett?
Yeah,
Crazy.
that's a good point. I mean, I don't
So
think I would invest super heavily into Kathy Wood even, you know.
I guess I'm saying maybe not us, but I guess the average person would.
Yeah, 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 yeah. But really, I think the key takeaway here is really have very strong conviction over your stock, and micro cap stocks might be great. And then the third thing is that, um, well, yeah, I mean, maybe it's unfair to say, but maybe investing in stocks over the general market might be more beneficial in terms of return.
In terms of index versus
Yeah,
picking stocks.
yeah,
I mean, yeah, I mean the only key is don't be wrong. That's the
yeah.
only.
Have very strong conviction. Yep.
Yeah, yeah, yeah. Interesting. Rare. That was fun. That
Yeah,
was fun. I can't wait
yeah,
for the next one.
yeah. When he's gonna be 30. Until the next
Yeah,
one,
it's
it's gonna
gonna
be fun.
be 30-year-old man.
Yeah.
All right.
Awesome. All right. We'll see you in the
Till
next
next
one.
time. Till next time. Bye.
All right. Bye.